This is our Forex blog for March 26, 2012, and like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. Today we started off with the dollar and the yen being one of the strongest two pairs, and the daily trend of the dollar was down, the weekly trend just slightly up, and the monthly trend kind of mixed. But you can always go with the real-time momentum. If it's showing weakness, then you buy it. Or I'm sorry, if it's showing strength, then you buy it. If it's showing weakness, then you sell it. The longer-term trends just add to your probabilities. For example, the Australian, the weekly and monthly trend is down, and when it starts showing some weakness here, you can certainly trade that against one of the stronger currencies at the time, which was the dollar and the yen. So you could have earlier in the morning, especially around midnight, sold the Australian dollar and sold the Australian yen. Here's the currency, Australian dollar. Keep in mind that when a currency is above the hourly, it's much more likely to go up. When it's underneath the hourly, it's more likely to go down. And we have a major support area right here, which is a Fibonacci retracement level. So even though the currency meter shows you to either buy or sell something, always look to see where the next support is. If you are looking to sell this coming up to midnight, it's a lower odds trade because the hourly moving average and the fib target, and there's a monthly pivot level right here, are all within 10 to 20 pips of where your sell area is. So if you did sell this, keep in mind that if it comes down to this level and it loses its momentum, then you might want to get out of your trade. You can certainly, once it penetrates part of the support areas, look to sell here, which would have been a break even, sell here with a small win, and once it goes back above the hourly moving average here, you stop selling it because it's more likely to go up, which it does. And it goes up to the Fibonacci profit target that I do each night. These Fibonacci retracement levels, which are light gray, and Fibonacci profit targets, which are dark gray, I spend 30 to 40 minutes a night so that you don't have to. Now this is an Australian dollar 5-minute chart. Most people have much better success, and I pretty much 100% trade just with the range charts. This is a 6 pips per bar Australian dollar chart, and every 6 pips it moves, there's a new bar. And so the intelligent trailing stops do a really good job of having very tight stops. If you sold right here, you lost a little bit. If you sold here, you made a little bit. And notice how the trailing stop kept you in this all the way up to the top. It caught pretty much 100% of the move minus 10 pips here. And it also keeps you into the move. If there's a big momentum, it has a wider stop. Once the market moves statistically too far, it tightens the stop. And our 3.0 containment band usually is the end of the move. Rarely do prices move outside of that, and in my opinion, you can make a living, support your family, and pay for your mortgage, house, cars, everything, by just looking for shorts at the upper red 3.0 containment band and looking for buys at the lower one. In fact, the euro dollar today was a few pips away from the 3.0 band on the bottom, and then when it hit the 3.0 band on the top, notice it had a little pullback here. If you shorted it again here at 36, it pulled back almost 18 pips there. Again, you only need 10 pips a day to double your account every 2 months. I'll show that in a little bit. Here's the euro dollar range chart, and again, notice how the trailing stop keeps you in. If you had bought this near the low, knowing that the 3.0 band is usually the reversal, buying it when it breaks the trend line or the trailing stop at 03 and out at 78. If you shorted here, you would have had a loss. If you went long right here at 84, you're out again with almost 20 extra pips. And the intelligent trailing stop is based on the technology around our FX Build Your Own trend. It allows you to set the weightings, which tools you use, and the percentages, and all the indicators values yourself. So the trend candles on a 5-minute bar use 20% weighting, 10% weighting for 15-minute trend candles, and so forth. And two of the tools, the ADX and the Momentum Pro, are intensity tools. If there's not much intensity to the trend, you don't see much strength or weakness here. And so I give that about a 50% weighting. If the euro is going up against almost every other currency, and it's doing so with 150% more intensity than it normally does for this time of the day, in other words, more volatility to the upside, it's going to reflect, and you're going to see levels at and above the 80 level here that are very significant. Let's look for some other trades, the currency meter. Later in the day, when the dollar and the yen lost their strength, you start seeing some weakness here. The yen was weaker than the dollar. There's more time frames that are down. The monthly trend's extremely weak. The weekly trend shifts down here at 7. One of the strongest currencies around that time was the euro. The Australian also makes a comeback, the New Zealand. So these are all currencies you can trade against the yen. You already saw the Australian dollar go up. The Australian yen also went up, as you can see, especially later in the day after 7. You have a nice move from about 86.80 all the way up to 86.40, another 60 pips up after our currency meter found that one. You can certainly trade the strong pound versus a weak yen. Later in the day, here's the pound yen. Notice when it's above the hourly, it's much more likely to go up. If all you do is focus on buys, when the trailing stop that's red, when it's having a pullback here, gets hit, you're in here at 29, out at 81. It's a 50 pip move. Wait for a decent pullback. You get in here at 61, out at 70. Not the biggest profit in the world. Another pullback where it doesn't really go much below the previous swing low, which is always positive. In here at 58, pretty much stopped out. You would have had a small loss. Long again here with a small win. Long again here at 886 with a small 15-20 pip win. And notice as it's going up here, the previous intensity of momentum is just not there. Let's take a look at the strong euro versus the dollar and the yen later in the day. You already saw the euro dollar on the range chart here, and it's perfectly acceptable not to be buying the euro dollar when it's underneath the hourly, which is a gray line in the middle. But when it comes up to the hourly and it doesn't get a pullback down, and when there's almost no weakness compared to the momentum on the way up, when it breaks out right here at 61, it's a perfectly good place to get in. If you use a trailing stop to get out, you only made 15 pips there. You get back in again here at 85 and out at 08. And you always have the fib targets of the last moves to go by. Most of the time, the first and second fib target are going to be where the market stalls. So if you wanted to exit half your trade here at 14 and the other half here at 8, you could have raised your average. You could have made a few extra pips there on that one. And you also have a currency like the Swiss, which really got a lot of strength here at 8. Pretty much all the time frames are up. This is a currency you can trade against the weak dollar and the yen by selling the dollar Swiss.